Imagine growing a multi-billion-dollar enterprise software company by 34% in a single quarter.
Yeah, which is just massive at that scale.
Right. You're accelerating your product velocity, you're landing the largest corporate clients on the planet, and, pushing these massive new AI platforms into general availability. Now, imagine doing all of that, literally all of that, and only hiring 17 people to pull it off.
It completely breaks the fundamental math of how we've understood corporate scaling for, the last 50 years?
Yeah.
The whole correlation between revenue growth and headcount growth just snaps. It's gone.
It is, and that staggering reality is exactly what we are digging into today. Welcome to the deep dive. We are looking at this from a strictly data-forward perspective, translating the Wall Street jargon so you, the investor, actually know what's going on.
Right, because we aren't looking at some theoretical white paper predicting the future of work in 2030,
No, not at all. Our mission for this deep dive is dissecting a single legally binding financial document. We're looking at the Snowflake Q1 fiscal 2027 earnings conference call transcript, dated May 27, 2026.
And it's a raw, unfiltered look at how AI is actually transitioning from boardroom hype into automated structural economic reality.
Yeah.
Because earnings calls they're the ultimate forcing function for truth in tech.
Oh, totally. You can't fake the numbers to the SEC.
Exactly. Executives can talk about theoretical AI agents on a keynote stage all day, but when they're talking to Wall Street analysts, they have to produce the receipts. They have to show how token consumption and compute costs are actually hitting the bottom line.
Which is why we're going to give you the actionable takeaways on whether this is a bullish or bearish signal. But before we get into the heavy math, let's just set the baseline.
Good idea.
We assume you know the enterprise data landscape, so we won't belabor it. But Snowflake is essentially the foundational cloud data platform for a massive chunk of the global economy.
Yeah, they hold petabytes of highly sensitive data for the biggest banks, healthcare systems, retailers, you name it.
And because my co-host here always loves a good visual metaphor, I see your digital backdrop has shifted to this sprawling, futuristic cityscape today.
Oh yeah, I had to. It represents the agentic enterprise, which is the core theme here. Because they possess the center of gravity for all that enterprise data, Snowflake is like the canary in the coal mine for AI adoption.
Right.
They see the exact moment a company stops just, testing an LLM and actually points it at their production data.
Which explains why we aren't just talking about a database anymore. We are talking about a hyper-automated, self-regulating ecosystem.
It's a huge paradigm shift. We're moving away from software as this passive repository that just waits for a human query. Now, software is an active, autonomous participant in the business.
Okay, let's unpack this. The agentic control plane. It sounds like an architecture straight out of a distributed systems textbook. We are going to deconstruct exactly how that control plane functions technically, but we really need to start with the empirical evidence first.
Yeah, the headline numbers.
Exactly. We need to move from the conceptual idea of AI into the hard audited numbers. And looking at Snowflake's Q1, man, the velocity is what really caught my attention.
The velocity is completely anomalous for a consumption-based model. Product revenue hit $1.334 billion for the quarter.
Which is huge, but the absolute dollar figure isn't even the real headline, is it?
No, it's the acceleration curve. They reported a year-over-year growth rate of 34%.
Yeah. And looking at the historical trajectory mapped out in the transcript, that is up from 30% in the previous quarter.
And 26% the year before that.
I just have to pause here, because as investors, you know that consumption model software companies at a $5 billion annual run rate simply do not see 400 basis point sequential accelerations.
Not naturally, no?
Right. It's like a massive ocean liner suddenly accelerating like a speedboat.
So what exactly is the fuel they poured into this engine?
Well, Sridhar Ramaswamy, the CEO, actually addressed that exact anomaly. Morgan Stanley pressed him on it during the Q&A.
And what did he say?
He outlined what he calls a 1, 2, 3 flywheel effect. To understand it, you have to look at the gravitational pull of AI on dormant data.
Dormant data?
Yeah. Step 1 of the flywheel is a fundamental repricing of the value of stored information. Historically, companies hoarded data, but actually extracting value from it was just too labor-intensive.
Because it's unstructured or stuck in silos?
Exactly. But now, large language models suddenly make that dormant data liquid. It's highly valuable overnight.
So the perceived economic utility of just having the data sitting in the warehouse skyrockets simply because the friction to query it is gone.
Precisely. And that leads to step 2, which is the deployment of specific native interfaces. Snowflake pushed Cortex code, which they call COCO, and Snowflake Intelligence into the environment. Right. These are the tools that let a user bypass complex SQL or Python pipelines. They can just use natural language to manipulate the database.
Yeah, but just introducing a new user interface doesn't automatically equal a massive spike in consumption revenue.
Right. There has to be a mechanical link between ease of use and compute burn.
And that is step 3. The ease of interaction dramatically expands the user base within an enterprise. It democratizes the data layer.
Oh, I see.
Instead of a narrow bottleneck of, say, 50 data engineers writing SQL queries, you suddenly have 5,000 business analysts, sales directors, and HR managers interacting with the data platform all at the same time.
It's a parallelization of consumption. You are basically widening the pipeline of people who can trigger a compute job.
What's fascinating here is how the adoption of these AI products literally forces companies to migrate their workloads to the cloud faster.
Just to get access to the capabilities.
Exactly. Sridhar noted that AI is accelerating consumption in our core platform as customers migrate workloads to Snowflake faster in order to access the data, context, and governance.
So the AI products are acting as a sort of gravitational anomaly. Companies aren't just paying for the AI queries. The AI is the lure.
The lure for the massive, highly profitable core data storage workloads. Yeah.
That is a compounding tailwind, and we see that reflected in their net revenue retention rate, right? It expanded to 126%.
Which is staggering. When you're dealing with the Global 2000, achieving 126% NRR means the organic expansion of existing workloads is just blowing past any churn.
And the enterprise penetration metrics totally back that up. They added 616 net new customers in Q1. That's a 38% increase year over year.
Including 13 Global 2000 companies in a single quarter.
But the metric that really illustrates the scale of the structural shift is the top tier cohort. They have 779 customers spending over $1 million annually.
And more critically, they now have 64 customers spending over $10 million every single year.
Wait, how many of those did they add in Q1?
8. They added 8 of those 8-figure accounts in the first quarter alone.
You do not sign off on a $10 million annual consumption bill unless the platform is deeply embedded into the mission-critical fabric of your company. You just don't.
No, you aren't spending that on some experimental dashboard.
Exactly. Which brings us to the architecture driving this dependency. Let's dig into the twin engines here, Snowflake Intelligence and COCO.
Right. The transcript defines this through the lens of the agentic enterprise. Ramaswamy laid out 4 non-negotiable architectural layers to achieve this.
Okay, what are they?
The first is a unified, strictly governed data foundation. Second is access to frontier AI models. Third is deep connectivity across enterprise apps. And the fourth, which is the crux of their strategy, is the agentic control plane.
The layer where intent becomes governed action, I think is how the CEO phrased it.
Yeah.
We really need to drill down into the mechanics of this control plane. Because look, the phrase AI agent is thrown around so loosely right now.
Oh, completely. Everyone claims to have one.
Right. Every SaaS company has a branded chatbot. But an agentic control plane operating at the data infrastructure layer, that is a fundamentally different beast.
It is. A chatbot is stateless and reactionary, right? It takes a prompt, searches a database, generates some text.
Right.
But an agentic control plane is stateful, proactive, and deeply enmeshed in the execution environment.
So what does that look like in practice?
Well, say a user expresses an intent, like reconcile last month's European supply chain costs against our current inventory models.
Okay.
The control plane has to decompose that natural language into a multi-step execution graph. It generates the SQL, spins up the compute clusters, orchestrates the data pipelines, handles the joins across different regions, runs the analysis, and returns the result.
And it has to do all of that while maintaining the exact security privileges of the user who made the request.
Exactly. That is the governed action part.
Right. And they are bifurcating this capability into 2 distinct surfaces, aren't they?
Yes. The first is Snowflake Intelligence. This is the business user interface. Eventually, it's a sophisticated RAG retrieval augmented generation architecture for non-technical users.
So a business leader can just interrogate enterprise data using plain English.
Yeah, and trigger workflows. The internal metrics show that the number of accounts utilizing Snowflake Intelligence more than doubled quarter over quarter.
Doubling adoption in 90 days. That just indicates this intense pent-up demand for data accessibility.
It really does. But the second surface is where the actual development paradigm is shifting. Cortex code. COCO now.
Right, the builder interface. This went into general availability on February 5th, and in just one quarter, over 7,100 accounts have deployed it.
It's designed to radically accelerate the software development lifecycle within the data layer. It lets you use natural language to create complex data pipelines, deploy machine learning models, and build bespoke AI agents natively on the infrastructure.
Okay, I have to push back here, or at least play devil's advocate for the retail investors and engineering leaders listening.
Go for it.
Open source models like Llama 3 and proprietary models like GPT-4o, they are getting incredibly proficient at code generation.
True.
So why wouldn't an enterprise just point an existing generalized LLM at their code base? Why is COCO driving such immense enterprise adoption? What is it doing mechanically that a generic frontier model can't do?
The differentiator is architectural context.
Okay, explain that.
A generalized frontier model is trained on the entire internet. It knows standard SQL, sure, but it doesn't know the bespoke, highly proprietary schema of a specific company's legacy Teradata migration.
Right.
It doesn't natively understand the intricate nuances of Snowflake's proprietary SQL extensions or its specific role-based access control hierarchies.
So a generic model hallucinates because it's basically guessing the infrastructure environment based on statistical probability.
Exactly. Whereas COCO has deterministic access to the actual metadata. It has home field advantage.
Home field advantage, I like that.
Sridhar addressed this head-on during the call. He pointed to published benchmarks showing COCO dramatically outperforms generalized frontier models when executing operations specifically within Snowflake.
Because it's deeply integrated into the metadata layer.
Yeah. It knows the schema, it knows the execution environment.
And it isn't just trapped within Snowflake's proprietary walls anymore either. The transcript highlights that they've expanded COCO's interoperability to orchestrate workloads across Amazon Glue, Apache Airflow, dbt, Cloud even, competing platforms like Databricks.
Which is a huge strategic move.
Yeah.
They are positioning COCO not just as a Snowflake assistant, but as a universal translator and orchestration layer for the entire modern data stack.
That's a massive addressable market. Furthermore, it's designed with native self-correction loops. The CEO quoted an academic who described coding agents like COCO as self-pedagogical.
That is such a critical concept. Self-teaching models.
How does that practically manifest for a developer using it?
It fundamentally changes the workflow from writing syntax to managing logic. A developer asks the agent to construct a pipeline. COCO generates the code, but then it can spin up a sandbox environment, execute the code it just wrote, evaluate the output against the expected schema, identify errors, debug itself, rewrite it, and then present the verified pipeline to the human.
It compresses the entire write test debug cycle into a single natural language command. That's insane.
Sridhar actually shared an anecdote about this that was pretty illuminating.
Oh, about his solo demo.
Yeah. He's the CEO of a multi-billion-dollar tech conglomerate, so presumably he hasn't written production code in years.
Right.
But he noted that he personally demonstrated going from a raw data set to creating a Cortex analyst search instance to building a functional agent and running a full evaluation loop on it by himself.
That is a profound proof point. Historically, standing up a secure search instance, indexing the data, developing the agent, configuring the evaluation, that would require a cross-functional pod of data engineers, ML ops specialists, back-end developers.
Working for sprints at a time. And he executed that entire life cycle solo via natural language.
The barrier to entry for complex systems engineering is just collapsing. But look, moving from the theoretical capabilities to actual enterprise deployments is where the rubber meets the road.
Definitely.
I want to look at how legacy companies, organizations that typically move at a glacial pace, are utilizing this right now. The transcript provides several high-profile case studies, starting in the financial sector.
The financial sector is perhaps the ultimate test of this technology because of the extreme regulatory and compliance burdens. Sridhar highlighted a massive Tier 1 U.S. bank that had just completed a grueling 2-year migration off of a legacy Teradata system and onto Snowflake.
To give you context, migrating a massive financial institution off a legacy on-premise data warehouse is akin to performing a heart transplant while the patient is running a marathon.
That's a great way to put it.
It is incredibly dangerous, prone to failure, and historically takes years because you are untangling decades of hard-coded proprietary procedures.
It is an engineering nightmare. But what's critical is what the bank did immediately after the migration concluded. They didn't just resume their standard reporting cadences.
What did they do?
They immediately leveraged Snowflake's native AI capabilities to build out regulatory intelligence applications, natural language analytics dashboards, and data discovery agents directly on top of the newly migrated platform.
So they pointed the AI directly at the most heavily regulated financial data in the country, natively within the compute layer, without having to export that data to an external AI provider.
Exactly. That is the governance moat in action.
Let's look at the operational scale outside of finance, though. What does this look like in a globally distributed consumer goods company like Nestle was mentioned?
The Nestle case study is staggering in its scope. They operate in 185 countries, managing over 2,000 distinct brands.
Wow.
The transcript details how they are utilizing Snowflake to construct a massive internal data mesh. They are building enterprise data products actively utilized by over 50,000 users across 150 global capabilities.
Rolling out a unified data product to 50,000 non-technical users across an organization as fragmented as Nestle is an astronomical undertaking.
The goal, according to the call, is to establish a real-time, connected view of the business, enabling proactive decision-making at the edge of the organization.
But my favorite example of this operational velocity comes from the wealth management sector.
Oh, yes. A major global wealth management firm developed and deployed a Cortex-powered agent that they straightforwardly named Ask Your Data.
I love that name.
And they deployed this agent directly to their executive leadership team.
The mechanical impact of this is what fascinates me. Before this agent existed, if an executive needed to understand a complex trend, say, the net flow of high net worth assets across Asian markets over the last 3 quarters, they would submit a request to a team of highly paid financial analysts.
Yeah.
Those analysts would manually write the SQL queries, pull the data, format the Excel models, and deliver a report, 3 days later?
Exactly. And according to the earnings call, the deployment of Ask Your Data instantly vaporized 60% of those manual inquiries.
60%?
Executives are now querying the data natively in real time, and the AI agent is writing the SQL and generating the insights instantaneously.
That forces a fundamental reevaluation of what an analyst's job actually is, right? If they are no longer required to act as a human search engine for the C-suite.
Absolutely.
But the speed of external development might be even more disruptive. Here's where it gets really interesting. I'm looking at the anecdote regarding Infinite Lambda, one of Snowflake's implementation partners.
Right. Infinite Lambda was prepping for a major pitch to a prospective enterprise customer. One of their engineers utilized COCO to architect and build a comprehensive customer 360 application.
And this wasn't just a static wireframe, right?
No, it was a functional application. It ingested raw customer data, performed analytical queries, generated chart insights, recommended next best actions, and powered live dashboards, all unified into a cohesive front-end experience.
And the timeline is the critical variable here. How long did it take?
The engineer built that entire application architecture in 5 hours.
5 hours?
5 hours. Sridhar noted that the CEO of Infinite Lambda actually called him after the successful pitch and explicitly stated, "You're changing this industry."
Because 5 hours is less time than it takes to schedule a sprint planning meeting in a traditional software development lifecycle.
Seriously.
If an implementation partner can stand up a bespoke, data-driven enterprise application in half a working day, the entire economic model of IT consulting and software development is inverted.
And we were seeing these rapid deployments applied to highly sensitive use cases too, like healthcare. Providence, one of the largest health systems in the US, is utilizing these exact tools to surface deep insights from unstructured clinical notes.
In seconds, right?
In a matter of seconds. By building these workflows directly within Snowflake using COCO, their clinical teams can access critical patient data instantly while strictly adhering to IPAW and other privacy mandates. The data never leaves the secure perimeter.
The overarching theme uniting all of these case studies, the banks, Nestle, Infinite Lambda, Providence, is a structural shift in the expectation of speed.
Yes.
The multi-year IT backlog has been the defining characteristic of modern corporate infrastructure for decades. Sridhar noted that timelines for complex legacy migrations, which historically span 2 years, are now demanded by customers to be completed in 1 to 2 quarters.
The impatience is palpable. Customers hunger for data-driven insights, and when they realize how rapidly these AI agents can execute pipelines, it permanently alters the acceptable timeline for IT projects.
But this leads us to a massive, glaring question of unit economics. As an investor, you have to look at the margins. Moving at this velocity, processing petabytes of data through advanced LLMs, It requires an astronomical amount of compute.
Oh, definitely.
The GPU infrastructure needed to power continuous RAG workflows across 50,000 employees is incredibly expensive. We have to analyze the margin magic trick here. How does Snowflake facilitate this massive compute burn without incinerating their own gross margins? And why aren't their customers terrified of the token costs?
That tension was the primary focus of the Wall Street analysts during the Q&A. An analyst from UBS directly challenged CFO Brian Robbins and CEO Sridhar Ramaswamy on the unit economics of AI adoption.
What was the core of the question?
The analyst rightly pointed out that as enterprise customers deploy agents utilizing heavy frontier models like Anthropic's Claude, the token-based usage costs will inevitably bend higher. Are customers going to hit a wall and start throttling their AI usage to contain these surging infrastructure costs?
It's the ultimate fear of the modern CIO. You give an AI agent to thousands of employees, someone writes a poorly optimized prompt or leaves a recursive loop running over a massive data set, and you accidentally bankrupt the IT budget by lunchtime.
Exactly. But Sridhar's response provided a masterclass in enterprise value calculation. He framed the token cost not as an IT infrastructure expense, but as a labor leverage metric.
Oh, that's a key distinction.
He returned to the example of the Tier 1 bank. He explained that while this bank might spend hundreds of millions of dollars annually on software licenses and cloud infrastructure, they spend 3 to 4 times that amount on the human capital required to operate, maintain, and connect those systems.
Okay, so if the software stack costs $200 million a year, the payroll for the engineering, support, and analyst teams required to run it is pushing $800 million.
Exactly. The human layer is vastly more expensive than the compute layer. Sridhar's argument is that any technology that acts as a force multiplier on that massive human labor force, making a developer twice as productive or allowing an analyst to clear 60% of their backlog instantly, is economically invaluable.
So they aren't throttling it.
Right. Customers are not broadly throttling their AI spend because the return on investment from human productivity so overwhelmingly dwarfs the marginal cost of the compute tokens.
The math checks out. Paying a fraction of a cent for a query that saves a highly compensated engineer 4 hours of manual pipeline construction is basically an infinite ROI.
Yeah.
But that doesn't mean enterprises are operating with blank checks. There has to be a granular level of cost governance.
And Snowflake has built that directly into the control plane. Sridhar detailed a highly layered approach. Administrators can implement hard limits at the overarching account level, they can restrict compute burn at the individual AI agent level, and they can set strict token quotas per individual user.
That makes sense.
But beyond blunt quotas, Snowflake is attacking the cost issue architecturally through intelligent model routing.
Right, because not every query requires the cognitive depth of GPT-4o or Claude 3 Opus.
Precisely. Sridhar explained that Snowflake automatically routes simpler deterministic tasks, like extracting a specific entity from a document or summarizing a basic text string, to vastly cheaper, highly efficient open source models like Mistral. They reserve the massive, computationally expensive frontier models exclusively for complex reasoning, multi-step orchestration, and intricate code generation. It's a dynamic routing layer that optimizes the cost-to-capability ratio in real time.
It's an elegant solution. You don't call in a senior partner at a law firm to proofread a standard NDA. You route the task to the paralegal.
Exactly.
But what about Snowflake's own balance sheet? The analyst pressed CFO Brian Robbins on how Snowflake is defending its own profitability, because hosting and serving these models at scale incurs massive infrastructure costs on their end as well.
This is where the financial engineering gets fascinating. Despite the explosive adoption of these computationally heavy AI products, CFO Brian Robbins confidently maintains Snowflake's guidance of a 75% non-GAAP product gross margin for the full fiscal year.
Wait, mathematically, how is that sustainable? If the AI layer is fundamentally more expensive to operate than traditional data storage, the blended margin has to compress.
Robbins was incredibly transparent about the physics of the motion. He directly acknowledged the analyst's premise, stating, "You're absolutely right. Our AI products have a lower gross margin than our core platform."
So how are they offsetting it?
2 massive counterweights. The first is sheer volume. The astronomical adoption rates of the core platform generate economies of scale that absorb the AI compute costs.
Okay, volume helps.
The second, and perhaps more strategic, is their infrastructure cost structure. Snowflake recently finalized a massive 5-year, $6 billion commitment with AWS.
By locking in a $6 billion multi-year commit, they secured deeply discounted reserved instance pricing and drastically lower bandwidth costs from AWS.
Yeah, exactly, which shields their gross margins from the AI compute spike.
That is smart.
If we connect this to the bigger picture, Snowflake is executing a highly sophisticated land grab. They are weaponizing these highly attractive, lower-margin AI tools to drive astronomical consumption of their deeply entrenched, high-margin core data storage and processing products.
The AI agent is the wedge. They are perfectly willing to take a slight margin hit on the natural language query because in order for that query to function, the enterprise must migrate and host petabytes of their proprietary data within Snowflake's highly profitable storage architecture.
Yes.
It is a strategic masterstroke to position themselves as the foundational operating system of the automated enterprise.
And we don't have to guess if this strategy actually yields operational leverage. Because Snowflake isn't just selling this architecture to Wall Street. They are aggressively, almost ruthlessly deploying it internally.
This brings us to what I think is the most consequential segment of the entire earnings transcript. We've analyzed the customer deployments and the margin mathematics, but we have to look at Snowflake's own workforce.
It's eye-opening.
Because when Sridhar Ramaswamy detailed how they are utilizing COCO to automate their own internal operations, it fundamentally rewired my understanding of the modern labor market.
Sridhar provided granular metrics across multiple operational silos, starting with their global support organization. By implementing COCO to automatically ingest incoming customer support tickets, analyze the logs, surface diagnostic insights, and propose likely root causes before a human engineer even touches the case, Snowflake achieved a 25% faster case resolution time.
And crucially, a 25% increase in throughput per support engineer. They instantly augmented their support capacity by a quarter without adding a single desk.
But the leverage becomes even more pronounced when you look at their highest tier engineering talent, their site reliability engineers, or SREs.
Right, the ones keeping the lights on.
Exactly. These are the specialized engineers responsible for ensuring the absolute stability and uptime of the cloud infrastructure. By integrating COCO into their incident response workflows, the SRE team reduced complex case resolution time by nearly 30%.
Wow.
Furthermore, they reduced the total engineering time spent per ticket by approximately 40%.
Just stop and consider the macroeconomic value of that. A 40% reduction in engineering time spent on maintenance and incident response. That frees up massive tranches of highly skilled capacity, allowing Snowflake to redirect those engineering hours away from simply keeping the lights on and funneling them directly into net new product innovation.
Sridhar explicitly stated that in their data organization, the deployment of COCO literally doubled developer productivity.
Doubled.
Doubled. As measured by objective metrics like pull requests merged and lines of production code written, they didn't just optimize code generation, they automated the surrounding operational friction. Sridhar noted they automated more than 100 distinct workflows across HR, finance, marketing, and sales in just a matter of weeks.
Let's focus on that go-to-market and sales leverage, because for investors, that translates directly to the top line.
Under their new Chief Revenue Officer, Jonathan Bullier, the sales organization has been heavily augmented. Solution engineers are using AI to instantly spin up bespoke prototypes for clients, and account executives are using agents to surface competitive intelligence and craft targeted pitches.
And what were the empirical results of that?
The number of active use cases managed and deployed on the Snowflake platform increased by 114% year over year.
And the conversion rate?
The number of use cases won per account executive increased by 86% year over year.
Every single account executive is nearly twice as effective at closing deals. The output per human has decoupled from the hours worked. It's like a restaurant where the chefs built robotic sous chefs, allowing them to serve twice as many tables without hiring any more staff.
That's a perfect analogy.
But the most staggering statistic of this entire deep dive, the number that completely contextualizes this internal revolution, came from the CFO regarding their headcount growth.
Oh yeah, the hiring number.
We established that they accelerated revenue growth to 34%, hitting a $1.3 billion quarter. They landed 13 new Global 2000 accounts. They expanded product velocity by 20% year over year. I have to ask you to read the organic hiring number again because it is the defining data point of this earnings call.
In that hyper-growth quarter, Snowflake organically hired exactly 17 people.
17.
To be precise with the transcript, they added 190 employees in total during the quarter. However, 173 of those employees were absorbed through the strategic acquisition of a company called Observe.
Okay, so backing out the M&A.
Right. Excluding that M&A activity, organic hiring to support a massive sequential acceleration in a multi-billion-dollar business was restricted to just 17 individuals.
For context, the transcript notes that in the exact same quarter last year, they added roughly 400 people.
It is the absolute destruction of the traditional linear scaling model. Historically, a SaaS company growing revenue at 30% had to proportionally expand its sales, marketing, and engineering headcount by roughly 30%. Sridhar was incredibly direct about this structural shift. He stated that while they will continue to invest aggressively in areas that provide strong leverage, that investment is being counterbalanced by the large amount of efficiencies that we're getting in a number of other functions that are very amenable to AI automation.
Which raises a profoundly disruptive question for the broader technology sector. If the absolute apex predators of the software industry companies growing at 30% at scale with massive gross margins no longer require armies of new engineers, analysts, and salespeople to support that growth, what happens to the tech job market?
It's a tough question.
If KRT is doubling the output of the engineers already sitting at their desks, the economic incentive to hire the next cohort of junior developers vanishes.
It is a stark reality. The decoupling of revenue growth from human capital expansion is not a theoretical projection for the next decade. It is audited operational reality in the Q1 2027 numbers. The enterprise has learned how to scale the machine without scaling the humans.
So they have the mind-bending technology architecture, they have proven the unit economics, and they are demonstrating unprecedented internal operational leverage.
Yep.
But the final piece of the puzzle is defensibility. We need to examine the ecosystem, the competitive moats, and how this translates into future financial guidance. Because AWS, Google Cloud, Microsoft, and OpenAI are all aggressively attempting to build the definitive enterprise agentic platform.
The confidence Snowflake has in their defensive position is entirely reflected in their forward guidance. CFO Brian Robbins didn't just highlight a strong Q1. He significantly raised the guidance for the entire fiscal year.
By much.
He raised the full year fiscal 27 product revenue projection to $5.84 billion, representing a 31% year-over-year growth rate. He projected Q2 revenue at $1.415 to $1.42 billion. And crucially, despite the AI infrastructure investments, he raised the full year non-GAAP operating margin guidance from 12.5% to 13.5%.
I am looking at the mechanics of that guidance raise, and it is highly unusual. For a consumption-based software company to hike their full-year projections that aggressively after a single quarter implies a massive structural shift in underlying consumption patterns.
It comes down to the strict forecasting methodology employed by the finance team. Brian Robbins was emphatic on the call. When we forecast, we only forecast observed behavior.
Oh, interesting.
They do not build guidance models based on marketing hype, expected feature releases, or theoretical AI adoption curves. Because Cortex COCO only entered general availability on February 5th, this first quarter was the very first time the finance team had actual empirical data on how the AI tools impacted compute consumption.
And the observed behavior violently exceeded their internal models.
Exactly. The adoption velocity of COCO and Snowflake Intelligence and the subsequent drag-along effect it had on core data warehousing consumption was so overwhelmingly positive that the observed behavior mandated a massive upward revision to the entire year's financial outlook.
That is a wildly bullish signal for retail investors. But I want to return to the competitive threat because I am trying to poke holes in this moat.
Sure, let's do it.
Why wouldn't a massive, technically sophisticated enterprise simply build their own AI control plane? They could take an open source model like Llama 3, build a custom RAG architecture, deploy it on basic cloud infrastructure, and completely bypass Snowflake's ecosystem. Why pay Snowflake to be the nervous system?
The Wall Street analysts probed that exact vulnerability. Sridhar's response highlighted a dual-pronged defense. First, Snowflake is aggressively model agnostic.
What's that mean in practice?
They are not trying to compete with the AI labs on foundational reasoning capabilities. They just expanded a $200 million partnership with OpenAI. They host Anthropic's Claude, and they integrate with open source models. They don't care whose brain you utilize. They want to own the data pipes and the execution environment.
But the real moat isn't model neutrality, is it? The real moat is the governance architecture.
Precisely. It is what they call fiduciary-grade governance. Sridhar and Christian Kleinerman, the head of product, spent significant time explaining that Snowflake has invested over a decade, building deep, incredibly complex infrastructure capabilities that are nearly impossible to retrofit onto a generic LLM stack.
Right.
We are talking about granular, role-based access control at a petabyte scale, dynamic data masking, role-level security, and cross-region disaster recovery.
And this is where the homegrown open source strategy falls apart. An LLM, by its very mathematical nature, flattens information. It doesn't natively understand corporate hierarchies, compliance boundaries, or access tiers.
Exactly.
If an enterprise builds a custom agent and points it at their entire database without a flawless metadata governance layer, that agent might hallucinate and expose unmasked payroll data to a marketing intern or leak proprietary trading algorithms across departments.
And a single governance failure at that scale is an extinction-level event for a CIO. Because the enterprise data already lives within Snowflake's storage layer, and the governance rules are already natively applied to that data via metadata tags, any AI agent operating through the Snowflake control plane natively inherits every single security restriction.
So the agent can only see and act upon the specific data that the human user generating the prompt is explicitly authorized to access.
That's right. It provides the speed of generative AI with the security profile of a banking mainframe.
And this brings us to a strategic acquisition mentioned in the transcript that entirely expands the blast radius of this control plane, the acquisition of a startup called Natoma.
The Natoma acquisition is structurally fascinating. It's a tiny company, bringing only 20 employees into Snowflake. But the technological capability it injects is massive.
Why is that?
It fundamentally extends Snowflake's agentic control plane beyond the boundaries of data warehousing pipelines and out into the broader operational application layer.
Explain the mechanical architecture of that extension. What does Natoma actually allow the Snowflake agent to do?
With Natoma's architecture integrated, the agentic control plane can orchestrate actions across disparate SaaS applications. A user can instruct the Snowflake agent to execute a complex data query, analyze the results, and then critically take action on those results in the real world.
Like what kind of action?
The agent can automatically draft and send an email via Gmail, summarize a cross-departmental conversation in Slack, analyze an engineering sprint, and proactively open, assign, and comment on Jira tickets.
But again, to play the skeptic, I can build API integrations between Slack, Jira, and my database using tools like Zapier or Workato right now. What is the fundamental difference?
The difference is the security of lateral movement. Sridhar explicitly noted on the call, the important point is not just convenience, it is control.
Okay, unpack that.
When you stitch together enterprise applications using standard API automation tools, you are creating massive, hard-to-monitor vulnerabilities. An AI agent with read-write access across multiple SaaS applications is a prime vector for a catastrophic data breach.
Because Natoma executes all of these cross-application actions through the Snowflake governance layer, the lateral movement of the AI is centrally monitored, permissioned, and auditable.
Yes.
It prevents an agent from hallucinating, scraping sensitive data from Jira and dumping it into a public Slack channel because the Snowflake policy engine governs the API call.
This raises an important question. If this governed control plane operates as seamlessly as the Q1 numbers suggest, how much of our daily rote interaction with enterprise software, the endless clicking through Jira, the manual updating of Salesforce records, the drafting of status emails, will soon be entirely piloted by automated background agents that merely report the outcomes back to us?
Based on the acceleration curve in this transcript, the timeline for that reality is compressing rapidly. Snowflake is no longer just a passive data vault. They are aggressively maneuvering to become the trusted central nervous system orchestrating the automated actions of the modern corporation.
They really are.
So what does this all mean? We started this deep dive looking at a legally required financial document, and by unpacking the mechanics behind the numbers, we've effectively mapped the fundamental rewiring of enterprise labor.
We really have.
We've dissected the anomaly of a 34% revenue acceleration at a $5 billion scale. We've explored the R architecture and SQL generation capabilities of Cortex code and Snowflake Intelligence. We've seen how titans like Nestle and Tier 1 banks are deploying these tools to vaporize multi-year IT migrations into single-quarter sprints.
Yeah.
And perhaps most shockingly, we've realized that Snowflake is proving the economics of this transition by automating its own engineering and sales workflows to scale globally while adding a net organic headcount of under 20 people.
It is a masterclass in observing a bleeding-edge technology cross the chasm from theoretical hype into structural, undeniable economic reality.
And to you, the listener, whether you are a cloud architect building these systems, a quantitative analyst whose backlog is being automated, or a corporate executive trying to defend your margins, the actionable takeaway from this earnings call is absolute. The agentic enterprise is not a buzzword slated for a slide deck in 2030.
No, it's not.
It is a mathematical reality reflected in hard, audited financials today. The expectation of how fast work can be executed, and more importantly, what is executing that work, is permanently changing underneath our feet.
I want to leave the listener with a final, somewhat philosophical thought to mull over, drawn from a subtle announcement buried near the end of Sridhar's remarks.
About Benoit.
Yes. He announced that Benoit D'Ageville, the visionary co-founder of Snowflake, who essentially invented the architecture of the modern cloud data warehouse, is stepping away from day-to-day operations in mid-June.
The chief architect is stepping back at the exact moment the architecture is learning to build itself.
It is incredibly poetic, and it serves as a microcosm for the entire industry. As coding agents like COCO become highly capable of writing their own complex SQL, self-learning through evaluation loops, and executing cross-application workflows without human intervention, what becomes the role of the human architect in the enterprise of tomorrow?
That's a profound question.
If the AI agent can architect and build the data infrastructure in 5 hours, who is responsible for deciding what infrastructure we actually need to build?
It shifts the human value from execution to pure strategic intent. We started this deep dive talking about the murky, often deceptive hype cycle of artificial intelligence. Today, through the lens of Q1 2027, Snowflake handed us a perfectly clear, high-contrast look at the automated future of work. The transformation is entirely visible, the economics are proven, and the infrastructure is deployed.
The only question left is how quickly you adapt your own skills to the reality of the agentic enterprise.
A fascinating and sobering diagnostic. Thank you for joining us on this deep dive. Until next time.